Managing momentum. In the slideshow Business Momentum, you'll see how the concept of momentum can be applied to a startup venture and can be a significant factor in determining which startups will fail and which will succeed. You're encouraged to view the Business Momentum lecture before proceeding with the following slides. This slideshow discusses some of the maneuvers that are available to help management generate and maintain momentum in a startup venture. Taking the analogy of the startup process being a journey, let's look at the dashboard of an automobile. This one shows the speedometer, where we gauge our momentum, on the left. The tachometer on the right shows how the revolutions of the engine are turning and is also prominently displayed. On the left is the fuel gauge. We need to know when we're running out of gas. Then there's the oil temperature gauge that alerts us when there's an engine problem. Modern dashboards also show our position on the map and the direction we're headed. We can look at the speedometer to gauge our momentum, but in order to manage our velocity in miles per hour, we need to control the output of the engine in revolutions per minute. By stepping on the accelerator pedal, we can control the power produced by the engine, as shown in the tachometer rev counter, and this enables us to influence or manage the vehicle's momentum. If we think of the startup company as a vehicle, we can think of the startup team as the engine. High-speed momentum in business results from a team operating at maximum speed and outputting the highest level results. We don't have a speedometer and a rev counter attached to each startup business. So how do we assess momentum? Management needs to ask if the company is making marked progress along its route, consistently checking off new milestones and stepping stones. This means identifying the milestones that have been achieved since the last review and assessing a rate of progress against the targeted milestones and perhaps the intermediate stepping stones. Momentum is evidenced by marked progress against milestones, but is also accompanied by a positive image within the company and the marketplace. As well as checking against milestones, assessing momentum in a startup involves looking inside the company at the team and assessing morale. Management needs to assess if the team is enthusiastic, excited, and generally upbeat. The next step involves looking outward at the company's image in the marketplace, assessing if the products or services are generating positive reviews, recommendations, and orders. Clearly, the process of assessing momentum for a startup company does not yet provide accurate speed readings like a speedometer, but it's important for management to assess generally if momentum is positive, stalled, negative, or in free fall. As we will discuss in subsequent slides and other slideshows, if momentum is not positive and the company is not moving quickly enough to achieve its goals, there are some maneuvers that management can undertake to radically turn things around or give momentum a gentle boost. Momentum in a startup venture can slow for a variety of reasons. There may be a fundamental problem. The product doesn't match market demands, or there's some other form of deep-seated issue with the business plan. The company could be burdened with excess baggage, perhaps saddled with debt, lots of bickering investors, or pending lawsuits. Management may be lost. The team has no vision of where the company is going or how it's going to get there. The chosen destination may have become unattainable, or some immovable barrier is blocking the company from reaching its goal. And of course, momentum is affected by a cash crisis. Even the prospect of a distant cash crisis can paralyze the team and halt progress. Well before the cash burns out entirely, the company can go into a state of free fall, where momentum goes into an accelerated reverse. Management can take action to boost or restart momentum in a startup company. Gentle management maneuvers include spreading the good vibes, where management propagates positive messages about the company, and plotting the route ahead, which involves identifying milestones along the route. Radical management maneuvers include switching target destinations, reinventing the company, and restarting the company, which we will cover in more detail in separate slideshows. Startups at all stages of growth can boost momentum by propagating positive messages about the company. Steve Jobs used to regularly send out propaganda emails to friends, colleagues, and an extended network of contacts. This approach has since become a management feature for virtually all successful startups. En route to building spectacularly successful companies, startup CEOs have become masters of momentum, sending out positive press releases or tweets on a daily basis and whipping the team into a frenzy of excitement. Successful startup CEOs maintain their own level of enthusiasm. Team leaders need to stay upbeat, regardless of the stresses and strains they experience running a startup company. As well as having an upbeat attitude at the top, it's important to have high levels of excitement in the whole team. Company gatherings and social events can help boost morale. It's important to stop team members from becoming despondent and spreading negative messages to their colleagues. Successful startup CEOs look for good news and spread it. Evidence of marked progress is ideal, but even small wins are worth getting excited about. They don't hide from bad news, but they don't dwell on it. If there's bad news, effective managers show that they acknowledge the news and move on. They realize that momentum and excitement are contagious and expose the passionate team members to as many company insiders and outsiders as they can. Propagating positive messages about the company is often a cornerstone of a startup's marketing and public relations strategy, and increasingly relies upon social media networks like Twitter and Facebook for broadcasting and distribution today. People always like to know where they're going and how they're going to get there. At the very least, they need to feel that the team leaders have a map and a well-considered route. This is particularly important in times of crisis. Plotting the route ahead is a management maneuver that boosts momentum by identifying the upcoming milestones to be targeted and showing a clear path toward the company's goals. When they're lost, parents teach children to stay where they are. If the child continues to wander into the unknown, they'll be more difficult to find. Without a clear destination or route, the natural instinct for most employees is to sit tight and wait for a roadmap and new instructions. If the team can only see a few steps ahead, that's as far as it will plan. This short horizon prevents product designers from designing new products, as they don't know if the products will ever be built, prevents engineers and from engineering, as they don't know if the product they're building will ever ship, and prevents salespeople from selling, as they don't know if the orders will ever be fulfilled. The team becomes downbeat and progress can stall. The lack of progress brings the morale of the team down even further, and the company goes into a cycle of paralysis. To convert negative momentum to positive momentum, management needs to break the cycle. This starts by restating the company's target destination, taking bearings, fixing the company's position, and plotting out a clear route to, there, from here. Plotting the route can mean identifying small stepping stones as well as large milestones along the way. Successful managers make sure the route is realistic and that each step is achievable by the team. With a clear route ahead, the team will realize that the company has a real future, and they'll see that work done today is not in vain. This long horizon will lift the team marked progress will be achieved and a new cycle of progress established. Technology-oriented startups usually raise funds from outside investors to develop their technologies and products. Investors in startup companies are looking for a return on their funds, and they cannot achieve the returns they need from dividends. So startups with outside investors have to achieve some form of exit in order to satisfy their shareholders. As we discussed in the slideshows on business planning, there are essentially 3 exits for startups to target: IPO, M&A cash flow sale, or asset sale. Initial public offering, IPO, has traditionally been a popular exit for startup ventures. IPO enables the investors to sell their shares to the public, and IPO has been the preferred exit for many venture and angel investors. However, the IPO market depends on the Wall Street and the public investors' attitude toward new stock issues. An IPO is not always an option for technology-oriented startups. Companies targeting IPO can often switch to M&A cash flow sale, as an M&A exit may be a more realistic option. M&A cash flow sale exits outnumber IPOs by at least a factor of 10. The milestones to IPO, especially in the run-up to the IPO process, are somewhat different to the milestones and management priorities when targeting M&A cash flow sale. For example, there's no point in setting up an investor relations team if the targeted exit is M&A, but there is if the exit targeted is IPO. Asset sale is another exit that startups need to consider. It's not usually as profitable as IPO or M&A cash flow sale, but when the company is unable to turn a profit, asset sale is often the only exit available. The milestones and priorities for a company heading toward asset sale are very different from the other exits, as the focus is on building valuable patents and technologies that can be sold at a profit, not on building sales and marketing organizations that are necessary for companies that need profitable cash flows. Team morale and momentum in a startup venture can get a boost when an unattainable destination is dropped and management switches its focus to a target that's more realistic and attainable. The switch is often from IPO to M&A cash flow sale, or from M&A cash flow sale to asset sale. If we determine the reason that momentum has slowed, this will help us to select the best maneuver for giving momentum a boost. A fundamental problem, such as the company's products no longer meeting the needs of the customer, requires a reinvention of the company, which likely includes a new product strategy. Excess baggage such as debt, a large number of bickering investors, a large board of directors, and persistent disagreement over significant decisions can slow down progress, require a restart of the company, and a radical reorganization. If the team appears lost, does not know where the company is or where it's heading, selecting a target destination and plotting the route ahead can get the company moving again in the right direction. Management can grind to a halt if the target destination becomes unattainable. For example, if management was aiming for a successful IPO and the company fails to qualify or the IPO market is closed, the team can become despondent and progress can slow as a result. Taking the focus away from IPO and switching target destination to an M&A cash flow sale or some other target that's achievable can boost momentum and encourage the team to push ahead at full speed. Cash crisis will usually slow progress in a startup company, as it will in any business. Staff layoffs and budget cuts can be necessary maneuvers to address a cash crisis, but cost cutting and slashing costs can hurt morale, slowing momentum. During times of cash crisis, management of momentum is critical to the company's survival. Regularly taking bearings and plotting the route ahead will show team members that there is a pathway out of the financial crisis and start them moving forward on a route towards success. Startups often set out on their journey targeting IPO or exit via M&A in a cash flow sale of the business as a going concern. When the business fails to generate profits and enters a cash crisis, management may have to decide to slash costs, lay off staff, and target asset sale as the only viable exit route. Switching destinations is sometimes necessary and can re-energize the teams when they realize the company does have a viable route ahead. Facing a severe cash crisis with the future of the company in jeopardy, management will often consider radical measures such as slashing costs, restarting and reinventing the company. Boosting staff morale and generating positive momentum is vital following a cost-cutting or radical momentum maneuver.